Good afternoon, friends. This is the fifth Income Tax Digest on not only the recent changes but also upcoming changes and compliance under income tax for which taxpayers must prepare from now. So, first of all, 31st December 2024 is approaching and the time limit for filing of the revised return for assessment 24-25 is approaching. More than 2 lakh taxpayers have disclosed their foreign assets, incomes or reliefs in their income tax returns. But many of the taxpayers have got an SMS or a notice from the income tax department with respect to undisclosed foreign assets, sources of income or tax reliefs, which the government of India has got from the information from the foreign countries. Such taxpayers and other taxpayers who have such assets or incomes should disclose by 31st of December 2024 and file the revised return in ITR 2 or 3. They must fill up 3 schedules, specifically 2 schedules. First, foreign tax assets schedules. Second, foreign sources of income schedule. And third, tax relief schedule if any they have received. So, residents, please be aware, please do relook at your assets, incomes and revise the returns. This is the last opportunity in case you need to do so. Second again is 31st December is the last date for filing for full relief under Vivad se Vishwas scheme 2024. And there are various disputes in Vivad se Vishwas scheme. First dispute on which the Honorable Delhi High Court has issued an order and an instruction to CBDT is that even in case a taxpayer has not filed an appeal on 22nd of July 2024, but the time barring period for filing of the appeal has not lapsed, it would be construed that the taxpayer is in the process of filing of the appeal and such taxpayer should also be allowed to go into the Vivad se Vishwas scheme. As of now, only those taxpayers who have already filed an appeal by 22nd of July 2024 are eligible for going into the direct tax Vivad se Vishwas scheme. The Honorable Delhi High Court in such case of Naveen Kumar Agarwal has also instructed the CBDT to issue requisite clarification within 2 weeks. Another issue is whether the unit of settlement for the purpose of direct tax Vivad se Vishwas scheme is to be considered as all the disputes in the assessment year or any particular dispute under which the appellant or the taxpayer wishes to go. So, I will explain with an example. Say for a particular year, there are 2 disputes. In one of the disputes, the department has gone for an appeal to a higher forum. In the other disputes, the decision is against the taxpayer, and on such dispute, the taxpayer wants to go for the direct tax Vivad se Vishwas scheme. Is it mandatory that the taxpayer, even for the dispute in which the department has gone for an appeal, clubs that issue also and for both the disputes goes into the Vivad se Vishwas scheme, or can he go as a unit of settlement on only that issue on which he has gone or not gone into the appeal, irrespective of the other issue in which the department has gone for an appeal? The Honorable Delhi High Court again has held in the case of Rosewood Buildwell that the unit of settlement should not be taken as the whole assessment year, and even for part dispute in my example, the taxpayer can go into the direct tax Vivad se Vishwas scheme. Third, important change for employers who are deducting TDS under 192 for their employees. From now onwards, after the amendment under section 192 subsection 2 capital B, the TCS credit of the employees, which is appearing in the form 26AS, also should be reduced from that tax liability at the time when the employer is calculating the tax liability for the purpose of deducting TDS under 192. So therefore, in case, say for example, a TCS has been collected for the employee on the payment made by the employee under liberalized remittance scheme, in such case, while deducting TDS on salary under section 192, the employer has to give the credit of such TCS to the employee. From 1st of April 2025, partnership firms have to deduct a 10% TDS under section 194 capital T on salary, remuneration, commission, bonus, interest paid to their partners on credit or payment to the partners, as the case might be. As of now, the partnership firm make the payment to the partners, and at the end of the year, depending upon the tax planning, they decide whether that payment has to be considered as a share of profit or as a salary or remuneration to the partners. Now, ab initio, before payment of the salary or even interest, commission, bonus, whatever name it be called, the partnership firms have to decide whether it is share of profit or all of these payments. In case it is other than share of profits, then they have to deduct 10% TDS under 194 capital T. Next important amendment, which will take effect from 1st of April 2025 with respect to assessment years 25-26 for the businesses, is the amendment under section 37 explanation 3, which now explains and clarifies that any payment made as a result of settlement of any proceeding which has been initiated as an infraction of law, then such payment for such proceedings as may be notified going forward would be considered as disallowed under section 37. So for example, in case you have made a payment for violation of a patent outside India or in India, then many of the times the courts have ruled, for example, the Delhi High Court in the case of Desiccant Rotors International has ruled that such a payment for violation of patents would be compensatory or reparatory in nature. From 1st of April 2025, it would be considered as a payment which would be disallowed under section 37, whether or not it is considered as compensatory or reparatory or not. So, from 1st of April, section 37 disallowances would be further expanded, and businesses need to be aware of this fact. And last, for those businesses which are renting out their house property, from 1st of April 2025 assessment year 25-26 onwards, such renting income of house property would have to be mandatorily categorized and offered to tax under the head house property and not under the head profit and gains of business or profession, as per explanation inserted in section 28. A dispute might be raised that such explanation to section 28 is retrospective and a mere clarification rather than prospective. However, there are precedents on the basis of which it can be contested that such explanation is also only with effect from assessment year 25-26. However, for such taxpayers who have income from renting, they need to at least from the next financial year offer such income as house property and not under PGBP. So friends, these are the various important developments which have happened or which would be happening, for which preparation is important by the taxpayers. Thank you for watching. Do like, share and subscribe to this channel. Stay tuned. Thank you very much.